Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. At the best of times, marine shipping stocks can face volatility from the global economic outlook, falling interest rates, and canal and trade routes disruption. And for the most part, despite inflation and trade disruption, marine shipping stocks have performed well in 2024. In early October, marine shipping stocks took a beating after it was reported that the U.S. dock workers struck a deal to expand their expired contract through January 2025. With longshoremen back to work, global trade disruptions were set to ease, and it would be business as usual. With fewer ships needing to be rerouted to avoid U.S. ports, shipping companies are expected to see their near-term freight charges return to normal. Investors looking for a short-term rebound in freight charges, which were already in a bit downtrend, sold as the strike ended, sending marine shipping stocks considerably lower. Case in point, on October 7, Okeanis Eco Tankers Corp, traded on New York Stock Exchange under ECO, saw its stock hit a new record high of $34.98 for a year-to-date gain of 45%. Since then, U.S. longshoremen have gone back to work, and ECO stock, along with rest of the broader industry, has tumbled. John?
Yeah, thanks, Mo. Now, trading at its lowest level since December 2023, ECO stock is down, as of this recording, more than 30% since October 7th. Now, ECO stock is also down 9.5% year to date and 6% on an annual basis, currently trading at around $21.80 per share. Now, for Wall Street, sell-off has simply put ECO stock in a better trading range. Despite taking a big hit, Wall Street is still bullish on Okeanis Eco Tankers, with analysts providing a 12-month share price target of $44 per share.
And Wall Street remains bullish on Okeanis because investors have overreacted to the U.S. dock workers strike and understand that the world needs crude oil and lots of it.
Yeah, and that's the good news for Okeanis, an international shipping company that operates in the crude oil industry. Its fleet currently consists of 14 tanker vessels, including 6 modern Suez tankers and 8 modern Very Large Crude Carriers, or VLCC tankers. It's also home to the youngest fleet and highest scrubber penetration, which is important. Scrubber is an exhaust cleaning system that removes harmful substances, including sulfur, oxide, and nitrogen oxide from exhaust emitted by vessels. Now, because of marine regulations, companies need to either use expensive fuel with low sulfur content or install a clean exhaust scrubbing system. Now, the company's very name, Eco, suggested went with the eco scrubbing systems.
How did this company do in the third quarter of this year?
Third quarter revenue actually slipped a bit to $84.9 million from $89.1 million in the third quarter of 2023. Now, the company reported third quarter net income of $14.6 million, or 45 cents per share. Was down slightly from $19.4 million, or 60 cents per share in the same period last year. Fleet-wide, the daily time charter equivalent, or TCE rate, was 43,900. Of particular note, its VLCCs outperformed its peers with a daily rate of $43,100 per day. Now, the company's third quarter revenue and earnings were negatively impacted by lower TCE rates and fewer operating days, which was mainly a result of affected maintenance. Looking ahead, the fourth quarter, management noted 66% of its fleet is fixed, or was fixed at the time it made its financial results known, with an average of $43,800 per day.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, when it comes to dividends, this company distributes 100% of its free cash flow.
Yeah, Okeanis Eco Tankers quarterly distribution varies because the payout is based on free cash flow. And as you know, it distributes at least roughly 100% of its free cash flow. Now, for example, in August, the company's board declared a second quarter dividend of $1.10 per share. Third quarter, it declared a dividend of 45 cents per share, or $3.31 per share, on an annual basis for a forward yield of 14.40%.
John, thank you so much for your insights. Okeanis Eco Tankers Corp continues to be a great marine shipping stocks. Despite industry tailwinds, it is reporting solid financial results, including strong TCE rates. While marine shipping stocks in general have taken a hit since the start of October, the outlook for the crude tanker market and rates beyond 2030 is expected to remain quite healthy and profitable. This is obviously not lost on companies insider, which own whopping 83.11% of all shares. This is a big number and encourages insiders to improve operations and generate long-term shareholders' value. A total of 66 institutions hold 16.08% of all shares. Together, insiders and institutions account for 99.19% of all shares. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.